The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, and this is the 23rd of August, 8 a.m. Excuse me, it's 8:06 a.m., which will be 12:06 p.m. when it's replayed later on, with Jason's show to follow on the half hour. So let's go. The Dow yesterday turned around with a red candle, and it was within, look, it was within, this is the left side chart, this is the daily chart, within the uptrend Chapman wave inside track repellent zone. So the high of the 25,402 on the 12th of June, rising trend line that goes to the trend line of the 25,692 high of the 7th of August. So the red line cuts exactly right on the line of 25,587 on the 26th of July. Almost the high of the August 7th, and then it goes underneath the breakout high of 3 days ago, where the Dow broke to a new recovery high, and then it followed through to the high of the 17th 2 days ago, 25,728, and yesterday was a red candle, and it went right back into this, what I call the Chapman wave inside track repellent zone. I used to call it a sell zone, but that's really repellent is much better, because sell means that every time it gets there, it's a sell. Yes, that's true, and that's the reason why I developed it. What happens when it breaks above that? What do you call it? So I just call it the repellent zone. If it goes above it, starts to close, and that's why I made that a green line, because if it starts to close nicely above it for 2 out of 3 sessions, you've turned that red line into a support line. Very simple technique. One trend line, parallel trend line, those two trend lines give you, look at that containment area. All right, so make it real simple. If at 12, when I said to subscribers to my opening call this morning, they'll be going out straight after this show at my usual time, 8:35, somewhere around there. If the Dow is up about a plus 40s or more at 12:30, that is good action. A plus 60 is very good action. If it's minus 30s or more, I've got to look at this, and let me show you quickly the 120-minute chart. Look, this 120-minute chart is a Chapman wave arch formation, left side, right side, price time match, and that takes you from the gap. I always like to go bump up against the wall, the Grand Canyon wall on the left. And I'm taking it from this bar right here, the 17th of August at 25,790. That's the bar. And you've got to the high that was made at 25,887 on the 21st. You've had 1, 2, 3, 4, 5, 6 sessions, red candles to the downside, really very mild action, but it has gone, just missed by 6 points or so, the 25,716 low that was made at 11:30 on the 120-minute chart on the 20th. So yesterday we went just above that to 22, and now we're going to be watching to see what happens. Why? Because you can see the MACD for the very first time crossed negative. The stochastic has pulled back sharply to 68%. Relative strength is at 58%. Watching this closely. Why? This could turn out to be a rectangle formation that makes an M formation, so that you dip underneath the fast-moving average, the 7-period differential, 9-period differential, the green line, faster-moving average dips under the red line, and then just flattens out and then pops above it. And that would say that the automated, Chapman wave automated support at 23,716 should kick in, and that it should be somewhat of a rally. But if the fast-moving average closes sharply under the slow-moving average, that white, I think it's called the beta or theta, I never remember which one it is, but if that distance is wide, that says that you will see this price move sharply lower. Okay, enough with that. I want to really get to the issue of a new all-time high above 25,007. What was that high? It was 728? No, it wasn't. It was 25,888. I knew there was a change there. 888. 888. That was made yesterday, the 22nd, 2 days ago, sorry, the 21st. That's going to be key. So why? Because if there's a break above it, what do I call that? G/B? That'd be really unusual in this particular nuance, and it might turn out to be a B, and then all of a sudden we're looking at a C and a D. Takes us into next week. Do we have a long weekend, Labor Day weekend, top formation forming, I'm going to say like in 1929, only because that's what happened in the September, the Labor Day weekend. That's where the 386 all-time high was made. I'm not comparing at all. What I am saying is that you've got to look for key dates. So if we spike higher from here, then I would anticipate further highs to come. I'm not sure that the Dow will make the 26,616 all-time high on the 26th of January. Almost all the others in sequence have. Look, the QQQ trading. Where did it go? Oh, don't type it on the chart. Let's do this quickly. There we go. QQQ, this is the NDX 100, made a high of 182.93, all-time high on the 23rd of July. Hasn't broken that yet, but it did make an all-time high, the second all-time high recently. If you look at the IWM, it was doing nothing. It was just going sideways. Bam, makes an all-time high, trading 171.32. If you look at the New York Stock Exchange, and this is a very broad New York Stock Exchange. It used to be a really important indicator for me. I like to look at it now. I'm not sure that the mix that it has is as important. It'll turn out to be important at some point. What is important to me, it is way under the all-time high that was made also in January, and that was at 13,000 something, 13,635, and it dropped all the way to 12,100s. Now it's trading at 12,990. A peak D was made. It's really in the lower, is going towards the mid channel of this big the very big rectangle from the January high to the February low. So it's really just stuck in a sideways consolidation. So that says to me, let's look at what are the possibilities here. The possibilities are there's a catch-up where one by one, we saw that earlier in the year, whereby one by one, finally the S&P made a new all-time high and the Dow followed, and then in January 26th, they both topped out. So that repetition can be a concurrent thing in markets as each one tries to follow. But when, like the New York Stock Exchange, it's so low, I don't think in this move we're going to see the New York Stock Exchange. I think it's the next big move to the upside. And that's what I'm thinking, that takes the New York Stock Exchange much higher. All right, now a couple of things. Let's go to crude oil, because this is now quite important. Crude oil trading right now up a little bit, up 8 cents at 67.93. This is a very strong leg B. And all of a sudden, I'm looking at this and I'm putting it together with the transports. I'll get there in a moment. The IYT, I'll get there right now. The IYT is trading 204, round number, but it's below the high that was made yesterday. Crude oil, FX, transport.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi everyone, we're back. Basil Chapman. This is the early morning show that's going to be repeated this afternoon. We'll do this again tomorrow, and then I will be on vacation next week, Monday through Wednesday. I'm not yet sure if I'm going to be able to do any shows, but then, of course, I'll be back to normal from Thursday. Okay, let's do this. The pattern, I was asked the question, do I think that September is going to be a down month? There are a couple of things I'm looking at, because this is, as long as this rotation goes on, as long as there is a magnet to the upside of the rectangle formation left side high in the transports, that was 206.73, that was made early in 2018. That was the week of the 19th of January, 206.73, plummets, really does. It plummets down to the 176.62 level for a second week of February, and then it works its way in that, what I call that inside buy mode. In the Chapman wave, it goes peak A, peak B, peak C, peak D. In the monthly chart, that gives you a U-shaped formation. So that says that if there is a chance, and yesterday's high was, 2 days ago, the high was 206.90. So we've broken that high. This is the exact sort of thing that you see in double tops, except there's a difference. When a lot of time has been taken and the U-shaped pattern is not a U, it's more like a rectangle, the double top has two different implications. You know, I talk about this in a V-shaped pattern or a U-shaped pattern, that the momentum to the downside in the V and the momentum to the upside on the way up says that it should get to that high, and it'll probably spike through it because it's got such a like a trampoline. It's got such a torque to the takeoff that momentum carries it further, and then you hang around at the top for a little while. In the U-shaped formation, everything is kind of gentle to that curve at the bottom, and then on the way up, it's a gradual build up, and then the momentum builds, and then the period of recognition when people say, "Oh my God, it's going back high," that's where it starts to run out of energy. Well, this is slightly different because of that immediate pullback in January to February, late January to early February, and then the work to get it back. So I'm making it real simple. The MACD in the monthly chart of the IYT, transportation ETF, is good. The stochastic's quite weak. The unbalanced volume is pretty good. And what I'm looking at is if there is no rally into the 208s by next week that holds, instead, maybe crude oil rallies strongly and the airlines and some of the transportation index itself starts to pull back, that would say to me, it's just very simple. It's a 204. Any close in the next week and a half below 201, 3 points lower, suggests that we've made a double top and that you're now at least in a consolidation and it could get deeper. Any break to the upside that really goes to the 208s and holds there says, you know what? We've broken key resistance, and now the area of 206 to 202 is really a support area. And now a reason why I wanted to take time to show you this is if you look at the SPY, the S&P 500 depository receipts, I do this because most people can easily type in SPY. Sometimes it's a little difficult to find the S&P cash. You will see, first of all, there was a little doji, 2 doji candles, and yesterday was a down day, but 2 doji candles. Watching this closely. Why? Because at 288.17, this is the close of yesterday, and it's unchanged right now. If there is a push above 287.31, that was the high of yesterday, the high of 2 days ago, 287.31, and that starts a leg D in this particular instance. I'm watching that double top. It's the same thing. You went to a peak E at Chapman Wave on the 26th of January at 28.63, pulled back to 250, 292, and now you've worked your way very steadily, very methodically. The MACD is strong, not as strong as it was in that big spike in January, but it's building a nice momentum. And the stochastics at 91%, that is very good. And we're looking at the technicals and the daily being very shaky, just barely holding above in the MACD. Stochastics at 87%, good, but it's starting to show a little bit of weakness. So they are just talking price. A close above, let's put it this way, in the next week and a half, let's say going into the first trading day after the Labor Day weekend, if the S&P has already gone to 290 and held the 288 support, that's very positive. If there's a breakdown and starts to trade under 280.84, 283.50 in the next week and a half, that's going to be the signal to say, okay, we're pulling back. I've circled peak D to E. I'm not going to do tomorrow's Technical Friday. I'll try to do a little more on this potential for a Chapman Wave instant restart. That would be really bullish. So we're kind of on the cusp here. After all, yesterday, a couple of people said to me, oh my God, after the news breaking with the 2 convictions, I thought the market would be down, just a whopper of a pullback. And meantime, I said to them, well, the fact that it held quite well, even though the Dow was down, the others held quite well, is impressive. It says the market is ignoring it. Remember, I've been saying, you've got to get consistency. You've got to get persistent bad news. You've got to get this dark cloud envelope, this cover, a news cover that is repeated over and over and over. And it takes time for the news media to pick it up. And believe me, if this market drops, if the Dow drops 450 to 500 points, the news will be that the market is turning down because of the convictions and the fear of what's going to happen to the presidency. Haven't got that yet. You've got to have it. People don't. When the late, you remember when grandmothers were talking about the NAS back in 2000, like it was their best friend, the NAS, the over-the-counter that we knew as over-the-counter, it was called the NAS, the Nasdaq. Yeah, when it becomes your buddy, watch out. So that's the same thing here. You've got to have the news repeated over and over. And so far, it's just one day. It's a one-off event in the market. So today's very key. So let me just say, the Dow up 40 or more at 12:30, that's good action. Plus 60 is very good action. Minus 30s or more, and it says, hey, be a little careful here. All right, so we want to do this. What about the SMHs? I was asked, yes, the SMHs, a nice rally. I'm just calling it a bounce right now. Watch it closely in the 106.80 area. That is good action. It's at 104.86 pre-market. Any pullback back under 104 is a big negative. Let's go to the TLT. I especially want to do this TLT leg E in the daily at 121.93. Real quick, look at this chart here. This is the global timber and forestry. Nice bounce. It's only a bounce ETF called Wood, and the HGX, the Philadelphia Housing Sector Index, even after Toll's fantastic news yesterday, it's really just in a sideways range. Look at the T-bond yields. pulling back towards the lower end. My contention is still that if the TLT keeps running, we should see some market pullback. So I'm going to just get ready to say that we're going to leave it here in a moment. I haven't got your copper. Copper's down some. Oh, of course, I wanted to talk about gold. Copper is down sharply. Gold, I mean, I said yesterday, what pathetic action in gold not to be able to spiral into the 15, 12, 20 level as the dollar was pulling back. Well, it's pulling back 6 points right now. Watch it closely, because gold does become very interesting if it can get you 12.20 with the dollar, which I still call it's still in a bull market in the weekly chart. The dollar is in sell mode in the daily. Watch the dollar. If it closes under 94.75, that gold contract has to move. Hey, have a great day. Stay tuned for Jason. This is the kickoff session coming up. And of course, this is recorded, so whatever you hear is going to be replayed at 12 o'clock. Have a great day. I'll see you tomorrow.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.